Hello everyone, I'm Ernie Humphrey, the Chief Operating Officer for TreasuryJobs.com. I'd like to thank everyone for taking the time to join us for our webinar today. Effectively mitigating payments and cybersecurity risk exposures. I'd like to thank our sponsor, TIS, Treasury Intelligence Solutions, who offers a leading cloud platform for the management of enterprise-wide global payments and whose strong commitment to thought leadership helps make this webinar possible today and available to you at no cost. The evolution of the Treasury function involves more ownership of the mitigation and management of financial and operational risk exposures, which encompass payments and cyber risk exposures. Today, I'm going to discuss how Treasury leaders can collaborate with IT, HR, sales, marketing, and other company leaders to identify, monitor, and manage these risk exposures, and to devise a comprehensive data breach response plan to mitigate the cost of a data breach. Before I delve into the content, I'm going to offer a few words about TreasuryJobs.com, cover a few housekeeping items, and then I'm going to review our specific learning objectives for the webinar today. A few words about TreasuryJobs.com. We connect Treasury talent with the right opportunities, and our mission is to be a trusted career resource for Treasury professionals. We already serve a lot of very large companies in the world, 300 of the Fortune 1000. Our postings are only Treasury jobs. We have expanded our value proposition tremendously over the last 3 months. We offer Treasury certification resources. We offer complimentary webinars that offer CTP credit like this one today. We also have a Treasury career blog which offers actionable advice to fuel Treasury career success, and even more along the way. Stay tuned. A few housekeeping items today. I'm going to actually send you the slides after the webinar today. So right after the webinar, you will get an email with the handouts. I'm going to be sending you links via the email to the presentation and the webinar recording over the next 24 hours. In order to be eligible for CTP credit, I'll need you to answer all the polling questions and remain on for the durations of the webinar. If you would like CTP credit for the webinar, I need you to email me at ernie@TreasuryJobs.com. Again, if you didn't catch that email, I'll be sending you the slides. Again, that's ernie@TreasuryJobs.com. I'd like to hear from you during the webinar, so please ask your questions for the Q&A session at the tail end of the webinar in the questions area of your GoToWebinar control panel. I'll do my best to get to all of your questions, and if I don't get to your questions, I'll follow up with you directly after the webinar. Finally, I appreciate your consideration in taking a short survey at the end of the webinar. We always strive to improve the ROI we offer our event attendees for their valuable time. Now let's take a look at our learning objectives. Our learning objectives represent the components of our value proposition to you in sharing your valuable time with us today. First of all, I'd like you to be able to identify current and emerging payments and cyber risk exposures at your company. I'd like you to be able to better mitigate current and emerging payments and risk exposures at your company. I'd like you to be able to construct a data breach response plan to help minimize the cost of a data breach or other event that impacts key technology resources. I also have a few other objectives which are just as important to me. First of all, I want to make you think. Second of all, I want to make you smile. Yes, Treasury can be fun, and even risk management can be fun as well. And probably most importantly, I want you to take an action after the webinar, whether that's asking someone a question, a colleague a question, going on a LinkedIn group, visiting TreasuryJobs.com, visiting the TIS website. I want you to take an action. So that is my goal. I'm not going to be able to specifically tell you how to mitigate every single payments and cyber risk exposure, but what I'm going to get you to do is to be able to ask the right questions, connect with the right people, and set you on the path in order to add value at your company in these areas. So how am I going to accomplish my objectives today? Well, first we're going to take a look at the accounts payable process. We'll look at parties and systems, and that will help us identify our risk exposures. Then we'll look at our payments risk exposures. We'll divide those into two different areas: internal exposures, internal within the walls of our organization, and also external. And then we'll take a look at tactics that we can use to eliminate and mitigate these exposures. Then we'll take a look at, I'm sure, a topic that's on the top of everyone's mind. We'll look at cyber risk security sources and trends that are going on in this arena. We'll talk about cyber risk mitigation, and we'll also talk about how to develop a data breach response plan. One of the things that we'll spend some time discussing is how your company should invest versus protecting your company from a breach in the first place and balancing that with investing in a data breach response plan. So I think a lot of companies are really unprepared for a data breach. And so if you have a data breach and you don't handle that effectively, that can actually totally destroy your brand, and it can actually make your company close their doors. So I think it's very important that we look at the trade-off there, and also we look at how to integrate our cybersecurity plan with our business continuity plans as well. And then I'll close things up with some final thoughts, and then, of course, we'll take your questions. So to kick things off, in order to help me focus my content, I'm going to launch our first polling question. Our first polling question is asking you to share with me all the different payment vehicles that your company uses. So please select all that apply. So what I'm going to do is I'm going to go ahead and leave that polling question up for another 30 to 45 seconds. And then I'm going to go ahead and give us a quick review of the results, make some comments, and then we'll move on with the content on how to identify payments risk exposures. Again, if you're interested in CTP credit, I'm going to need you to answer all of the polling questions during the webinar. And again, I'd like to take your questions in the questions box of your GoToWebinar control panel. So I'm going to go ahead and leave this polling question up for another 10 seconds or so. So let's see. Well, it looks like we might have had only allow one answer. So that's on me. But let's just go ahead and take a look at those anyway, and we'll talk through those. So I'm going to go ahead and close that polling question. And thank you for your immediate feedback. That's what I'm looking for. So let's go ahead and get those questions going here. So let me go ahead and share those results with you. So let's go ahead and take a quick look at those results. So as we look at those results, what we'll see, unsurprisingly, I think all of you selected the first one, which is checks. I think most people write checks. In the U.S., we are still very heavy in that arena, ACH and wire payments. And really what I was looking for in order to help me focus my content was D&E. So how many of you are leveraging credit cards and or T&E cards, and also PayPal and other methods, because these are areas of risk exposures in which people might not be aware of the risk because they're not as common. So thank you very much for your consideration there. So now we'll go ahead and get back to our content. So as far as identifying payments risk exposures, you're going to have to have some pain to get the gain. So the first step, I believe, is to map your processes out in excruciating detail. And I think it always helps to put some structure there. So I try and map things out in terms of people, process, and technology. So you want to identify all the people that are involved, all the processes that are involved, and all of the technology that is involved, because all of these three main categories can be potential sources of payments risk exposures. So again, first let's start with internal risk exposures. We're going to look at the people, who is involved internally, what type of internal processes do we have, what does our workflow look like, and we'll talk about this a little bit later. A lot of times the workflow in and of itself makes risk exposures happen and makes them worse, and then we'll look at the technology. How many systems are we losing here? How many systems are we using here? So how many systems are we using here, and then how are they able to communicate with each other as well? And then we'll want to transition on to identify the root cause of each exposure. And then we'll want to identify the interdependencies of risk exposures. And this is where I see where people don't pay enough attention. So you can look at, okay, what are the exposures that we face? But there's a lot of interdependencies here, especially if you look at people and technology. So that's really going to be the first step in our process. So right now what you'll be seeing is the accounts payable process. So I apologize if this might be a little small, but again, I'll be sending you the handouts what I'm trying to do here is just give us a flavor of all the different areas where we can create and help mitigate risk exposures. So if we start on the lower left-hand side, we'll see we have our suppliers. Our suppliers are going to generate a request for us. We're going to take them. We are going to have to, what we're going to have to do is we're going to have to see if we can even onboard our suppliers. We're going to have to onboard our suppliers. We're going to have to generate the necessary tax documentation. We are going to have to verify the legal entity, so there can be some manual work there. If there's manual work there, that's obviously a source of risk exposure. Once they're verified as legal entities, we get them through that initial process, goes through the AP process. Then the next step going to the left is to move towards the approval process. And then there's workflow that's associated with that approval process. And then as we go to the approval process, okay, now we're going to the approvals. So now let's go on to the payment initiation side. Again, there can be more manual entries there. And then from the time the payment is to be set up until it's effected, there's other sources of risk exposures, which can be lack of payment status and the transaction fees not being optimized. So again, we need to look at the process from end to end. We need to look at all the systems involved. We need to help our suppliers supply us with the information that we need in order to mitigate our risk. We want to look at how to make things a straight-through process. So again, it'd be good to review this document. So when you're mapping out these documents, you want to look at people, process, and technology. So back in the day, when we first had Sarbanes-Oxley, we went through all these painful processes, how to do a wire and all these things. So those things actually might prove useful. So I actually went through this exercise when I was a treasury manager. It was incredibly helpful and incredibly enlightening, and it's really going to shed some light to you as far as where your risk exposures lie and where you're going to be able to mitigate those. So sometimes, like I said, you have these inherent root causes of payments risk exposures, and we'll talk about this later as well. A lot of times those are due to manual processes and technology issues, but they can also be related to processes that are disjointed. You can have people working in silos. People aren't aware. The workflow is not optimized. So again, you need to invest in understanding that process, and until you really understand that process in terms of the whole scenario in terms of people, process, and technology, you're going to have trouble in identifying and mitigating those payment risk exposures. So in terms of some root causes, anytime there's manual intervention in that diagram, in the flow of the AP process, that's going to be a potential cause of risk exposure, because you're going to have a risk of someone intentionally or unintentionally making a mistake. So either there's going to be a problem, there's going to be an exception, or someone's trying to commit fraud and send money somewhere or get it approved where an approval should not be done. In terms of processes, there can be a lack of adequate separation of duties in payments processing and automation workflow. If you don't have the right technology in place, there can be a lack of transparency and centralized view of bank account activities. So if there's a big delay in your bank account activities, there can be fraudulent activities, and especially if you have global bank accounts, that can take you days, if not weeks, to really uncover that activity. So obviously, you want to make sure if a fraud actually happens, you want to make sure that that's addressed as soon as possible. So again, we'll talk a lot more about this in terms of technology, but a big way to mitigate a lot of these risks is to get that transparency, visibility. Nothing is more valuable than visibility, and we'll talk more about this in your bank account activities, in your bank relationships. To the next point, if you don't have a complete overview of signatory authority across all bank accounts, that can be a huge risk exposure. When I was a treasury manager, I was responsible for centralizing cash management across the globe. Well, this was probably 10 years ago. What I found was a lot of the authorized signers on the accounts didn't even work at the company anymore. So it can be pretty disturbing what you'll find in your global bank accounts. So now there are several technology solutions, including TIS, that allow you to get that visibility, and you can actually manage your assigning authority. And so that is absolutely critical. So I talk about payments risk. You have to have control of cash. You have to understand it. You have to have visibility. So in order to have control, you have to have visibility. You have to have complete visibility and control. If there's a lack of automation in reporting, that leads to human error. So I'm looking at my cash forecast. I'm looking at disbursements. Someone might type something in incorrectly. It might cause me to miss something. Let's say, for example, a fraud occurs. Oh, it was $100,000. Someone made a typo. It was $10,000. So it didn't really hit my radar. And then lastly, control. Lack of a detailed audit for participant activity and payment processing and authorization for each disbursement. So a lot of these technology solutions allow you to look at user activity. So I can see for any given payment, okay, Barbara, what did Barbara do? Barbara set the payment up. Barbara had this other step in the process. She submitted it to John. So it's really crucial to have that participant activity, that clear audit trail. So one of the things that you need to make sure of is that you have that visibility and that control as well. So again, you really want to lock things down. And then in terms of those controls, again, if it's not manual, those controls are automatically in place. And then if you have those controls in your system, if there's some sort of control issue that happens, the system will automatically flag the report. It'll stop things. It'll make you adhere to your policies. So a backstory of this is you have to have very clear policies on payments. Who can approve what, separation of duties, that all has to be clear and enforced. And in terms of who can disperse funds, what you are going to do is that you're going to want to make sure that there's that separation of duties. And in my case, the board of directors had to approve those signers. So just to take a step back on the ability to manage signatory authority with bank accounts, it's actually through access to another system. So for example, there are systems called EBAM, Electronic Bank Account Management, and that is how you manage that authority. So some solutions providers such as TIS give you that connectivity, ability to communicate directly with the banks through SWIFT and other systems that allow you to actually manage that authority. So a big piece of this is that connectivity and the communication with the banks and controlling the communication, managing it for the affecting of payments. So let's take a look here at some payment risk by disbursement type, because I think that's interesting. So what you're going to want to do is you're going to want to dial in on these internal and external risks by payment type. And then you're going to want to look at these internally and externally by payment type. And then ancillary to that kind of ancillary conversation, you also want to be asking yourself is, when you're doing your payments processing, you want to take a step back and say, okay, how many checks am I writing? How many things am I doing by credit card? How many things am I doing by wire? And then you have to take a look at yourself and say, why? This is another webinar, and we'll probably have one on this, but checks. Why do you write checks? How do you optimize your payments? How do you optimize your bank fees? How do you optimize all these things? So take a look at some survey results from the 2016 AFP Payments Fraud and Control Survey. I strongly encourage you to go to the AFP website and take a look at the survey. I think the 2017 survey will be coming out in the next few months. Just a fantastic source of information. And in general, AFP offers many great resources in terms of treasury and payments risk management. So what you'll see is there's a little bit of a downturn in terms of the fraudulent activity, in terms of checks from 2009 to 2015. But what you'll see is that there is more than a corresponding increase in terms of wire transfers. So what we're seeing in terms of wire transfers is more in terms of some sort of probably an email-based scam where they send an email in, some social some social engineering scams, or they'll get someone to, we'll talk about this later with cyber risk, that's really cyber risk, but we'll talk about that. So you'll need to look at all those different types of risk. And then if we talk about commercial cards and debit cards, there are card payments such as purchase cards, where you can really add some very strong controls on that side. For purchase cards, you can actually limit what people can purchase by merchant category codes. So you can really lock that down. And there's advances in T&E solutions as well. That can be a source of risk from your internal parties. You can actually set your policies automatically to compliance with T&E policy by these great T&E expense management solutions as well. So technology is not magic, but it is definitely your friend. But just because you're doing electronic payments, by no means does that mean that that's going to mitigate that payments risk. You always have to look at the people and the process and the technology behind that. And then, again, we'll talk a little bit more about this later, but just because you are using a third-party provider, let's say you take credit cards and you outsource your PCDIS compliance, right? That doesn't mean that you don't have ownership for that. So you want to get certifications from your suppliers as well, SOC1, SOC2, formerly SSAE 16. So you want to look for those certifications as well. So that would be an external source. So you need to look at your internal sources and your external sources. So again, you want to do internal and external sources by disbursement type. And again, the AFP survey is a fantastic way to look. So I'll read these to you. I apologize. This is a little small. So you want to look at these risk exposures, and these are by no means comprehensive, just to give you a flavor of these. So you want to look at the payment risk by disbursement type, right? So paper checks. What do we mean? Just paper checks, bank drafts, ACH, automated clearinghouse. You can say direct deposit. Some people call it EFT, wire transfers, credit transfers, SWIFT, FedWire, and then all different types of cards, debit card, ghost card, prepaid card, T&E card. The thing to know with the cards is that, on a side note, there are different fees associated with every type of card, and there are also different risk exposures. Some of the types of cards that you use come with fantastic risk mitigation. As I mentioned before, some of the purchase cards, procurement cards, allow you to really lock down what can be spent, but also offer you the ability to really lock down that approval process and create that audit trail, but also offer tremendous savings in terms of pumping the associated accounting transactions back to your ERP system. So internal exposures, let's take a look at those. Your people internally. One, an employee alters bank account information. So whoever is responsible for managing that bank account information, getting it in there for your suppliers, who can edit that, who might have the ability to edit that as something is on the way to being a payment or after a payment. That gets back to separation of duties. So an exposure exists for each employee involved in entering or approving check payments, right? In addition to anyone who manages supplier information. So obviously you want to be really sure that you trust the people that are involved in these processes. So the more people that are involved, the more nodes of risk exposures that you can have in the process. So that's one of the reasons why it's very important to look at this straight through processing. If we go to the card side, we can have employee misuse, and we can also have embezzlement as well. And then in terms of paper checks, we can have risk exposures if we have fraud protection services in place and they're not used correctly, such as if positive pay is not administered correctly. I actually had this exact situation. My company had positive pay, and the person that was responsible for releasing the payments did not review an exception item, and the check was cleared. So, boom. In terms of checks, you can have duplicate checks issues. Also, manual workflows can cause delay in payments, and that results in discounts being missed, and that is a risk of leaving money on the table. So some of these internal are consistent across the enterprise. Again, on a high level, by payment type, who has access to information, who can control the flow of payments, and you also need to look at who has security access. So who in my IT department has access? So who has access? You really need to do a really, really comprehensive audit every few months in terms of who has access to what systems, who has access, especially if you have a lot of homegrown systems, who has the ability to go in there and divert any type of payment in your process flow. In terms of external exposures, in terms of checks, you can have an altered pay name and amount on issue checks. I can tell you there's nothing more frightening than getting a positive pay item and seeing your name on a check that you never wrote for $100,000. That has happened to me before. So again, as a side note, positive pay and then something called payee positive pay, where it matches both the amount and the payer who you're paying it to, is tremendous. You can see counterfeit checks, which is a little bit different, but anytime you issue that check goes out the door. Who knows where it goes? Someone gets in the mailbox. And the other thing, which often was a risk exposure to myself, we did a lot of acquisitions. And every time I was winding down an AP account for an acquisition, I started seeing positive pay items. So you always need to keep your eye on the ball. In terms of ACH and wire transfers, again, we talked a little bit about social engineering. For ACH, you can have bank account hijacking. And we'll talk a little bit more about this in cyber risk. What can happen is people can get into your system, and a lot of times they'll sit there and they'll wait. They'll wait for your keystrokes. They'll wait to figure out how you do things, when you do things, how to take your attention off the detail. And so these things can happen. In terms of ACH, if you don't have a debit block on your account, unauthorized ACH debits, we don't like this when people do this to us, but in Treasury, I had an ACH debit block even on my master account. People didn't like it, but they got over it. A huge way to mitigate risk. And ancillary to a few other things we mentioned, reverse phishing for bank account information, similar across wire transfers. In terms of the card space, lost or stolen cards, a data breach at your supplier, storing card information. So again, we talked about that. You think you're offloading the risk. Well, what if they get hacked? What's your liability there? What controls do they have in place? What kind of liability do you have? What kind of insurance do they have? Are you an additional insured on their policy? How much are you covered for? So you want to put a dollar amount to that exposure that you have with that third party. And then you want to do your best and do a cost-benefit analysis of how much of that risk do I want to offset through their insurance, what's the gap, what is my insurance, can I get a cyber risk policy, or can I get a rider on my crime policy? And then identity theft or cardholders. Again, payment risk. Seems very comprehensive, but this is what you need to do. You start at the top level, internal, external, payment type, payment systems, people, process, technology, and go through and really drill down on these specific areas, and that'll help you really understand how to mitigate those risks. So I think it's apparent in the content that we've covered so far, technology can be huge in terms of helping you mitigate the risk that you have and then risk you might know that you don't have. So I've got kind of a best case scenario here in terms of really locking down that payment side. So if you start to the left, you open the sync bill, straight through process, authorize payments, execute payments, you sync those payment details. So what does that look like, right, in a solution that might involve more than one system, but what is the dream, right, that we have? Secure payments from anywhere, end-to-end controls. You can set threshold and limits. This mitigates the risk of internal fraud as we eliminate parties from the process. You can, there are controls in place like insurance and other things. You can guarantee against online fraud. You can centralize all payment types. Didn't really touch on that. One of the best ways that you can help mitigate risk is to centralize payments. So the more people you have making payments across the globe, the more risk exposures that you're going to have. Again, you don't have that visibility and that control. You don't have that complete visibility or control over what everyone is doing overseas. Believe me, I have been there, done that, and we centralize everything. I could sleep at night after that. We talked about this. You can optimize the payment method. What's the best way for you to pay? What's the most cost-effective way for you to pay by check, wire? What is it that you can use to negotiate your terms. How can you improve your working capital optimization? You can automate remittance stale. Boom, sending that along and getting that as well. So to be able to send that to your suppliers is huge. So think about cash application on their side. That is a huge way to improve your relationship with the supplier. If you can get them the remittance detail they need and automate their cash application, it's going to be fantastic. There are emerging solutions on automatic cash application. Ooh, yeah, I gave you a little teaser there. We're going to be doing a webinar on that technology coming soon, and I'm very excited because I have never seen that in all the years that I was in Treasury. I've been waiting for it. You can quit processing checks. You can quit or mitigate sending those files. So again, you want to look at people processing technology, but you really want to look, technology is kind of the engine that allows you to do it, and you got to make sure you have the people and process in place to do that. So my summary slide for this area before we delve into cyber risk exposures. In order to mitigate or eliminate payment exposures, this is one of the most important slides. So if I give you a few slides to focus on, this would be one of those slides. You want to remove manual data entry and manual intervention in that process. So you map that process. You want to look at every place there's data being keyed and manual intervention that's happening. How can we automate that? How can we get it into a system? How can we get it into one system? How can we automate those controls? How do we get that? Do we get that clear audit trail? You want to minimize the number of people involved in the process. Seems like common sense, right? But easier said than done. Look at your processes. A lot of times it's your processes that will dictate how many people are involved. Also, it can be related to the number of systems. You want to minimize the number of systems involved as well. You want to have a system or set of systems that communicates nicely with each other. In this day and age, there's on-premise systems that absolutely do this, but to me it's amazing. Now the cloud-based solutions are made to communicate with each other. There are APIs, there are just fixes and hooks into these, so the systems are made to communicate with each other. So take advantage of this. I call it integrability. Do a review of your financial systems, your fintech integrability. Huge, huge, huge opportunity to mitigate payments risk. In terms of the technology that you need, you want to leverage technology that optimizes visibility. You can't see it, you can't control it. Visibility everywhere, cash, control, audit trail, everywhere. Without it, you're going to pay the price. You want to leverage technology that enables detailed audit trails. Automation. How nice would this be? And I didn't have this when I was a treasury professional. Someone comes around, internal audit or external, I want you to walk me through an entire transaction, for the whole process. Boom, push a button. Here you go. Give it to the auditor electronically. It's all there. Everything's scanned and everything's there. Who did what, who touched what, went what, met all the controls. Perfect. How long did it take you to do that without this technology? Me? Hours. So, time saver. You want to leverage technology that automates workflow. And depending on the number of payment types, your workflow can get a little bit complicated. So you'll start to have a bunch of nodes. I go here, oh, it's a check. It's a check over $10,000. It goes to this node, that node, this node. So you want to look at technology that can help you automate that workflow. Again, the number of people that are involved in that workflow and any manual processes that are involved, that's going to disrupt that workflow. You want to leverage technology that automates and manages the controls, right? Control is key. Cash is king. Control is key. Internal controls are key. Governance is king. And then also, we'll talk a lot about this in our next section. Educate employees on how they impact risk exposures. We'll talk about this in the cyber section. You will see people's eyes light up. People don't realize what they're doing. They don't realize the impact that they have on risk exposures, especially on the cyber side. Again, we'll talk about this. What happens when you open an email? What happens when you're on social media? What happens when you do this, this, this? You have to have formal policies, and you need to ensure that compliance. And that education isn't just when someone gets hired, right? I used to get hired, and then I'd sign the form. Okay, I signed the technology thing. Well, do you think I really thought about that after I did that? Even I'm a treasury person. I'm a risk management person. Did I think about that? Probably not. If I would have been educated every year. Every year you have to have a half hour based on that. So that can be huge. So again, wrapping up the payment section. Starting at the top side, payment risk exposure. You need to map out your entire process. You want to look at internal exposures, external exposures. You want to look at those by payment type, and you want to look at how you can leverage people, process, and technology and visibility to identify those controls and then mitigate those controls. So before we switch over to the cyber side, I am going to go ahead and launch our next polling question. So next polling question asks me to share your perspective on your opinion regarding the following statement on whether your company understands and manages your cyber risks well. So again, this is a risk that is continually evolving. It gets a lot of press, and it should. So there are actions that you can take that are common sense actions that can really reduce your risk. But again, something that is critical, if I can get you to remember this, is someone, one of my strategic partners was telling me this analogy. So it's almost like some people have the Roach Motel mentality. So instead of focusing so much on someone getting in, we want to make sure they can't get out, right? The idea of Roach Motel. People check in, but they don't check out. So someone can get in to your data system, but they can't get anything out. So let's go ahead and take a quick look at the poll. And honestly, I just about fell out of my chair. So yeah, so 80% of you strongly agree or agree. I hope that's actually the case, but I would encourage you to take a fresh look after the webinar. So I hope that you all have this really, really dialed in, but I would imagine that after this part of the session, you might want to go and have a conversation again. So let me go ahead and hide that, and let's make sure that we got our screen showing there. All right. So now let's go ahead and talk about some cybersecurity and the threat dynamics. We could do webinars on this all day long, but I'll try and make this brief to the point with actionable advice. So let's look at some cyber attack costs and trends. There was a fascinating study, Ponemon Institute 2016 cost of cybercrime study. So I've actually got the link there, so that's a free. So a lot of my context here is going to be based off this study. There are many, many resources here, but I think this gives a good overview. I'd encourage you to look at the big four accounting firms, risk management firms, consultants. Get this done for free. One point that I would make, if you have never had a cyber risk assessment, you need to do that, and that should be done every year. So let's look at cyber attacks, costs, and trends. This is where we can have some fun, right? Not fun, but it's just eye-opening. So what's the average cost of a data breach? $4 million. So think about that. 1 second, data breach, one event, one person gets in, one person, data breach, $4 million. And not surprisingly, the costs have been going up, 29% increase since 2013, 18% in cost per records. What the survey shows is that the more records that you have, the more likely you are to be hacked. The cost of lost business, this is huge. So that $4 million average cost is $3.97 per every customer that you have. So every record customer you have. So $3.97. That is huge. So the reputation, the brand that your company has tremendous value. Once you lose one data breach, can destroy your brand. So the cost of that lost business is kind of the aftermath, which is why that data breach response plan is so critical. So that cost in lost business doesn't need to be $3.97. If you do it right, you can mitigate that cost. Cost of a U.S. cyber breach per record continues to increase. So we see from 2013 to 2016, it's $221 per record. And I'll note within the survey there are some fantastic details by industry. Of course, certain industries have higher cost per record, higher incidents, and then company size as well. You can have those. probably the best part of the survey that I got was the trends in the cost of a data breach research. So for you on the webinar, this needs to be communicated up the ladder to the CEO. The cost of a data breach, it's a permanent cost. You need to be prepared to deal with it, and you need to incorporate it in your data protection strategies. What does that mean? You need a data breach response plan. The biggest financial consequence organization that experience a data breach, again, is lost business. Your brand today is more important than ever, especially as more and more people go to the subscription economy. You have to earn that business every week, every month. Again, following a data breach, organizations need to take steps to retain customers' trust and reduce long-term financial impact. If you have a data breach, you need to get out in front of it. You do not want to be on the nightly news having them inform your customers of a data breach. You want to get out in front of this. I know it's hard to get your people to agree to this, but one of the gentlemen I know pretty well is a gentleman named Lanny Watkins, who is fantastic at PR when there's a crisis. You need to get out in front of it. You need to own this. Your data breach response plan immediately kicks in. You need to own the communication of this. And most data breaches to be caused by criminal and malicious attacks. So these breaches take the most time to detect and contain, and they have the highest cost per record. So there's some data a little later on this. I'm not going to tell you that this is the punchline. You'll be amazed how long there's a breach and you don't know about it. So on the good side, I believe it's, I'll save it, but preview 100 days. A lot of times it's over a year before anyone even knows it. So that data breach response plan, either you have something in place, the Roach Motel, right? Boom, you can get in, but you can't get out. Or you have something to mitigate that and detect it earlier. So again, the longer it takes to detect the risk, the more it's going to cost you. Regulated industries such as healthcare and financial services have the most costly data breaches. For healthcare, for HIPAA and financial services, and they're also the biggest targets. So in terms of the amount that you invest in this, it has to be a cost-benefit analysis for your company on some level, but if you're in healthcare and financial services, I'm sure you already pay more attention to this. The rest of us, let's look to those industries too for best practices, right? Those are the people we want to connect with, our peers, people that mitigate payments risk and cybersecurity risk in healthcare and financial services, who are treasury and risk managers. Those should be your best friends. Those are the people. Nothing is more valuable than talking to your peers. How do you guys do this? Why do you do it this way? What technology do you use and why? Again, talked about this a lot. Data governance programs reduce the cost of a data breach. Some interesting survey data that I've found is that some companies don't have a formal definition of what sensitive information is. You need to have one, and you need to communicate that to your employees. And then this is common sense, but investments in data loss prevention, encryption, and endpoint security are important in preventing data breaches. So again, these two slides are also tremendously important and kind of shine that light if there's any doubt that this needs the attention. So let's take a quick step back. And what's a data breach? This seems pretty basic, but I think it's important. And this is something that needs to be communicated to your employees as well. A data breach is an event which an individual's name plus a medical record or debit card is potentially put at risk, either in electronic or paper format. So we talked about how do we mitigate risk. Well, we need to know what the causes of the data breaches are. What are the exposures? So in the study, the Portman study, they identified three main causes: malicious or criminal attack, systems glitch, human error. What does that look like? People, process, technology. And the cost of a data breach can vary accordingly, and the safeguards in place for those. So a little bit deeper on the industry side, interesting information. You can take a look at the webinar. Top 4 industry targets, not surprising: healthcare, education, financial, and life science. Still, the number is huge. But look at the variance there, right? Healthcare, $355 per record. So absolutely unbelievable there. And even in the retail side as well, I thought that might be a little higher. But again, the point here is the variance there. And then we'll talk about the root causes there, right? Malicious or criminal attack, systems glitch, human error. So you'll see that malicious or criminal attack is the top, 48%, and then the systems glitch and human error. So that systems glitch is a technology issue, and then that human error is that human intervention on your side, and maybe that's an internal person opening an email. So one of the things, again, now we'll pivot more towards what is your data breach response efficiency. So I found this eye-opening as well, a graph that shows by type of breach, how long until you identify a breach and how long until you contain it. So this floors me, right? For a malicious or criminal activity, by the time you identify it, they have been in your house in the cookie jar for 229 days. Dramatic pause, right? And then if you look at to contain a breach, even though if you think you know about it, it still takes another 80 days, 60 days. So on the malicious or criminal attack, that is 1 year. 1 year your brand is in peril. So again, I hope that drives that point home on the importance of that data breach response plan. So in terms of mitigating data breach costs, very, very interesting graph. So things that you can do internally to help you mitigate these costs, things you can take away. This slide, huge takeaway. Incident response team, that decreases the cost per record by $16. Your data encryption, how your data is encrypted, and how it's encrypted throughout the process going from system to system. If you have a level of encryption, it needs to be something that the data is encrypted when it's passed to each and every system. It can't be that, oh, my data is encrypted here, oh, but then I do something with it, and then I send it to another system, but then it loses its encryption. Boom, risk exposure. And this one I thought would have been higher. Employee training. I actually am very involved in CFO roundtables across the country, and when we talked about risk management and cyber data, all of our strategic partners talked about employee training. This probably will give you the most bang for the buck. So employee training, and just simple things you would think, opening emails, social media policy, monitoring that activity, training your employees, training them what to do. Not only training them how to prevent, but training them what to do if something happens. So a specific case study someone shared with me. There was a CFO. He got an email some time ago about something. He opened an attachment, right? So there came a day he actually initiated a wire transfer. And then as soon as he did that, all of a sudden he realized his inbox got flooded with like 700 emails. And because he had been trained on what a data breach might look like, he immediately called IT and said, oh, I think there's something going on. I just initiated a wire transfer, and I got all these emails. So what were they doing there, right? They're trying to distract someone from kind of catching that. So you get that bank activity for that wire transfer. Well, the CFO's not paying attention. He's got 600 emails in his inbox. He's going to go look for Joe, the IT guy, and give him a piece of his mind. Meanwhile, someone's running away with your money. So the fact, and they were able to immediately know something was going on, immediately get on the bank, immediately trace that money, boom, get that investigation started, really mitigated that cost. So having that training is key, and also related to that is threat training. Walk people through this. What happens if this type of data breach happens? What do we do? Live scenario, right? How do you do that? Once a year. And then I talked about this a little bit earlier, business continuity management. So you want to look at that. So you want to align your business continuity and your cyber attacks as well. So key on mitigating that data breach. Again, a great chart. Things that you can lose. The things below the line are things that actually add to the cost. So if you have more consultants engaged, that makes the cost go up. If you have third-party involvement, that makes the cost go up as well. So more specifically on how to mitigate the cost of a data breach, implement a preventive program similar to on the payment side. You want to assess your risk exposures, and you want to have appropriate information security investment on protecting that. Employee training. You want to implement an effective cyber response plan. You want to implement a response plan. You want to create and align with that business continuity team plan. You want to integrate business continuity and data breach response. You want to do threat training, test, and test again. You want to look at cyber insurance, but you want to ensure appropriate coverage. There are a lot of exclusions in common policies for social engineering. You have to be careful. So you have to look at all the sources and make sure that you're getting what you pay for, right? And then if that social engineering is excluded, and then you want to look at if you can purchase a social engineering endorsement on that crime policy. So I'm going to wrap things up with some closing thoughts, and then we'll go ahead and take some of your questions. Again, I can still take your questions in the questions area of the GoToWebinar control panel. Would love to have your questions. Again, if I do not get to your question, I will be following up with you directly after the webinar. So, closing thoughts. Let's go back to payments risk exposures. You want to map your processes, excruciating detail, people, process, technology. You want to look at internal exposures. How are they? Boom, what are they? How do I identify them? How do I mitigate them? By people, process, technology. External, people, process, technology. People, you want to have, obviously, you want to get the right people. Trust the people. You want to mitigate the amount of people involved in the process. Process, I want automated workflow. I want processes that are have synergies. I don't want 85 different procedures to process a payment. Technology, I want to have technology. I want systems that communicate with each other. I want straight through processing. You want to identify the root cause of each exposure. What is it? This is an exposure. What's causing it? People, process, technology. How do I mitigate it? What's it going to cost me to do that? And then another key point again, identify interdependencies of risk exposures. Manual process, boom, that creates people exposure, process exposure, technology exposure, all those. So you want to look not only at I'm going to mitigate risk A, risk B. Well, a lot of times you can take actions, especially in terms of technology, where you can mitigate all three. You want to get the bang for your buck. In order to mitigate or eliminate payments exposures, again, remove manual data, intervention, minimize people, minimize systems, engage the magic, right? Technology, optimize visibility, audit trails, automate workflow, automate controls, educate your employees, please. Cyber risk. You want to invest in understanding each cyber risk exposures, balance the investment in prevention versus response effectiveness. You want to align your business continuity and cyber risk, educate your employees. Good governance. Construct and enforce a detailed social media policy, please. Do not get comfortable using a third party, as it often doesn't eliminate liability and cyber risk insurance. Cyber insurance is no substitute for a cyber risk program. So before we kick off the Q&A, I'm going to kick off the Q&A. I'm also going to launch our last polling question. Have a little fun here. Asking you, if you had $500,000 to invest in your Treasury Department, how would you spend that within your Treasury Department? So with that, I'm going to go ahead and kick off our Q&A session. So the first question that I'm getting, and it's actually a few questions involved in creating a consensus in terms of implementing some risk mitigation programs. Great question. So you have to have the buy-in. So if you're going to implement risk management, risk mitigation programs, you have to engage and inform everyone involved in the process. So that can involve people from AP, accounting, treasury, internal audit. You want to engage everyone that has a vested interest, tell them what they're doing and why they're doing it, and then you want to make sure that there's some accountability in terms of everyone that is impacting those risk exposures. It all gets back to what I would say is that education piece, right? So educating your employees is critical on all sides of the course. So another next question is around, is around how do I make sure that I have the right insurance coverages in place in terms of cyber risk and those related exposures. Great question. So what you'll want to do is you will want to look at you want to be able to benchmark what other companies in your space are doing. So you can do that through a consultant. There's free resources. There's free webinars that focus only on that as well. So so you want to reach out. You want to reach out to your peers, right? Who else is managing risk in your space? How do you do that, right? You want to go to your conferences. You can go to LinkedIn. You can go to specific LinkedIn groups as well. And when I used to manage risk, we had an insurance broker. They always want to get in your door. Let them come in your door. It's worth it. Have them benchmark all of your policies. Ask them, how should I manage my cyber risk? What are the big ones? When I was back in the day, Marsh, Gallagher, other folks, ask them to benchmark it. And then ask your peers what is missing, what is not missing. So the good news is that research now is available much more readily, and it's also free relative to what it used to be. So I used to have to pay for everything. Now everyone wants your attention as well they should. So next question is, we definitely touched on this. So how does the ascent of the APA tech change cyber risk security and mitigation techniques? Very good question. So again, I talked about systems integrability, right? So now I can have my ERP system communicate with TSI, for example. So what does that mean? So we have to look at what is the security of the data that's being passed back and forth between those systems. So we might remove a person or a system, but we need to look at the security of that data as it's being transferred between systems. So you want to look at the security protocols for each system that you're using. So internally, if I'm moving data from my ERP out to the cloud, okay, who's my cloud provider? And you even have to go as deep as where is that stored? What is that risk there? So great question. So you want to dig in there. So sometimes doing that straight through processing, it can also add a risk exposure. So it's not going to eliminate that. But in general, what you will find is that these folks, even though there's a newsworthy event twice a year, these folks get paid each and every day to do their job to mitigate these risks. So it's an either or, right? I can use that, or I can use my Joe the IT guy who spends probably 30 minutes a month on worrying about that. So you got to look at how good can my firm do this versus how good can the best in the world do this to protect my data. So in closing, let me share that last polling question with you. So looks like we have 55% is evenly. That's good. People, process, and technology, and upgrading technology, which is not surprising. And I'm actually glad to see that because again, that is the fuel, right? So with that, I'm going to go ahead and close the Q&A session and just go ahead and make a few closing comments. So once again, I would love to thank our sponsor, TIS. We appreciate and share their commitment to thought leadership, which is also evident in the great content and resources they offer, which you can review by visiting the TIS website, www.tis.biz. And please note, you'll have the opportunity to request to be connected with TIS via our post-webinar survey, which will launch immediately following the survey. Also encourage you to go to TreasuryJobs.com. Please let us know how we can better serve your professional needs. Search jobs. We have resources, blogs, webinars, and those of you who want to engage talent. You're a Treasury leader. You want to engage the best talent. You can post a job there. So finally, I'd like to thank you, the audience, so much for your valuable time. If you have any questions about the content we covered during the webinar or about TreasuryJobs.com, please contact me at Ernie@TreasuryJobs.com. Thank you very much, everyone. Make the rest of your day great.